Morning, everybody. It's the 17th of December. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by the usual crew, Ian Coleman and Steve O'Hare. Good morning, guys.
Morning, chaps.
All right?
Yeah, fair to middling.
Just chucking a load of stimulus at this market, left, right, centre, Europe, US.
Just keep
Having it.
boosting it up.
Yeah, I can't see any change in direction between now and the new year. These risk assets are on a tear and looking super strong, aren't they?
Yeah.
So news from overnight: European Union leaders cleared the bloc's 1.8 trillion euro stimulus package, clearing the path for a much needed injection of funds as the COVID-19 resurges in many nations. UK sticking to their plans for Christmas, although urging extreme caution as families will start getting together from the 23rd. Had the Fed last night as well. Chairman Jerome Powell struck a note of optimism in his press conference following the central bank's latest decision. The Fed said it will maintain its huge bond buying program until substantial progress is seen in employment and inflation. Brexit talks obviously still in focus again this week. They do appear to be headed for a finale, with the fishing rights being the main area of disagreement between the two parties. In terms of risk assets, we've seen Bitcoin top $22,000, getting close to 23 now, actually, the way it's going, looking super strong as people are obviously optimistic about where we are at the moment. And I've got to be honest, I don't see any change to these trends between now and the end of the year. So I think it just may be a case of going with it. But, you know, people are starting to
struggle for a macro event to turn it. That's for sure.
Yeah. Maybe a bit of year-end profit taking. I don't know. May take effect, but it doesn't look likely at the moment.
Maybe Trump supporters taking arms.
What, try and storm the White House over the Christmas period?
Just before Christmas.
Yeah. I mean, you know, they're pretty speculative events, aren't they? Right. He's got some charts to show us. Let's have a look.
No, I don't want to show mine.
Come on. Have all your patterns been blown out the water? There's dead crabs and butterflies everywhere.
No, this was what I had a pound on that with you yesterday, didn't I? I'm sure. No, we got the move. It just didn't sustain it, unfortunately. So that was the move into FOMC, and then that was a press conference, and you can see what's happened. And now it's taking new lows. And the honest answer is the same thing that Joe's saying. I'm still a stubborn bull on the index, but I just, how can you be at the moment? It just keeps on taking out and breaking to new lows. So I mean, sort of monthly chart. I mean, I know this is hindsight, but we talked about this breakout, and that looks like it's quite sustained now. But we're through 261.8% quite clearly. We had like 8 days or whatever it was of consolidation, and now we've moved to the downside. We've got another support here at 89.54, and then to this chart, there's a chance of a bounce, I suppose. We've got a 161.8% fib here, and a 224 here at 89.56. So again, this is a buy zone, but we just keep on hitting these buy zones and getting mild corrections and then smashing through them. So I think you might get a tick up to the upside. Whether or not it'll be a trend reversal, I really don't know. Euro dollar, it's gone smashed through my confluence area now. What, 121.50.55? We're 100 ticks above that at the moment. I was sort of looking at this morning and trying to convince myself that that's a 5-wave pattern, but really a 5-wave pattern could be up here. When we're looking at this chart, again, you've got a bit of resistance here, but there's no technical pattern to stop this rally, really. And like I said, I think we might get corrections, but I don't know if they're going to be trend reversals. Aussie dollar is the one that I really fancied, and that was my level at 76.10. And you can see it's pushed through there this morning. The reason I like that is off this chart, and even put a big red arrow on it, which I'm now going to take off. 76.10 to 76.19 was the resistance level. It's broken through there. Dollar CAD looks like it's going to move down to all these fibs that we talked about, 125.32, 125.21. Dollar yen, 102.50 is the target area, really. And euro sterling, we mentioned sort of selling into rallies to close that gap, which it did. And now it's looking quite bearish and quite bullish for sterling. And they're obviously talking about potentially having some news come out again today. So yeah, the dollar, I'm still cautious about it, but I think on an intraday basis, at least, you've got to be looking at selling into dollar strength until you get a decent reversal pattern. And sterling looking pretty strong.
Yeah, indeed. Steve, what's going on with indices? I mean, they've obviously been pretty bullish, but noticing maybe a bit of stalling in a few of them at the moment, but not sure you can back against them.
I was just going to say about the dollar index as well, just from a different, slightly different perspective. Obviously, we've got the potential now for, I think, a double top, especially if we break below this the swing low from back in February 2018. Comes in at 88.25, and that will potentially see a nice measured move to down here.
Ouch.
Yeah, so that's pretty scary looking stuff for the dollar. But as you say, it still has to break this 88.25 level, and you can see how it's reacted around this level previously. It's been a sort of like resistance turns support, support turns resistance, blah blah blah, all the way back. Goes back to a long way. Even if we sort of like take it back really to around about March 2005. Anyway, I don't know if that's sort of having an impact. The one thing I wanted to look at was Bitcoin.
Look at that.
We all want to look at Bitcoin.
Obviously, Bitcoin is a very different market to what we normally see. It's not a standard market. It's a very much a one-way market. It's you've got owners out there. You don't get very many people shorting it. Speculators don't really short this market. It's basically there's a finite amount of Bitcoin out there. And so for me, it's always going to be one of those easily manipulated markets, which I think that's what's going on now. There was a lot. I think this 20,000 level was a very key resistance level. We got up to it, closed around there at the end of last month, and this month we had a little bit of a pullback to 17,600, and bang, gone straight through it. Again, there's not going to be any natural sellers in this market, so this really is a highly manipulated market, and there's going to be a lot of people now getting sucked into thinking, oh, 20,000 was the level, it's gone through there, let's all dive in, let's all get long of it, and it straight away it's up to 23,000 within sort of a few
I was
days.
going to do that this morning.
Ah, really? What on your gun to head?
No.
All right. I was going to say good luck with that. Yeah, so you can see what's happened over the last few days. And again, dollar weakness means you have to use more dollars to buy cryptocurrency as well. So the dollar weakness is having a bit of an impact here. Again, it's sort of like it's turning into a bit of a safe haven asset along with gold. So gold, I did a gun to head to buy it yesterday. I think I got stopped out on that, and it's just carried on going up overnight.
Really unfortunate with that.
Yeah, hit my target this morning, but that's no good when your stop is quite tight. But we're back through this cloud on the 4-hour chart, so pretty positive for gold. And yeah, I think the hourly chart even highlights it even more. It's taken out the head, which is, again, that's the level where we stop thinking about this head and shoulders formation and even a potential double top formation, because we've sort of unless we get an aggressive pullback in the last hour, we've sort of gone through it, and a close above there, close above the 1875 on an hourly basis is very positive for gold. So there's my gun to head challenge trade idea from yesterday.
Yeah,
it's all about the timing.
So gutted. There's the OMC as well, which obviously created extra volatility that you didn't need, really.
So yeah, jumping on to the indices, again, they're pretty much sustained. They're still up here. They're still looking positive. DAX all-time highs. CAC trying to push through it. The Dow all-time highs. NASDAQ all-time highs, pushing through it again. There's just no holding this back. It will reverse, but as Ian said, I'm no idea what's going to make it reverse. And when it does, you know, it's when we all decide it's not going to reverse. Let's all get long of it. That's when it reverses.
Could be today then.
After you, anyone?
Yeah, there's a guy who sent. I'm trying to find it. I'll share my screen quickly for this picture. I thought this summed it up quite nicely. You see that?
Yeah.
It's just that's the sort of herd mentality. That's when you start getting the tops, isn't it? When you start seeing people thinking, "Oh my God, I'm missing out here. It's at 23,000. It's going to 100,000," and they all start piling in.
Yeah.
Well, you know, but there was not. They weren't there when Bitcoin was down there.
Well, what about when it was 2,000? Who can? I mean, it was 2,000 quite recently, just above 2,000.
4,000 at the beginning of this year, wasn't it? March.
No, 2,000, 2,500. When was that? Do you know? Can you remember when we had the real big sell-off? Don't look at a chart, E. It's like this is the competition.
I thought it got to 3,850 in March.
Yeah, but there was that spike low. The spike low that I'm talking about was around, would you believe, 2018.
Yeah, right.
10 bagger.
December. Yeah. We had the swing back to $3,000 December 2018. So 2 years ago exactly.
Wow.
And yeah, like you say, it'd been up to 20,000. It was down at 3,000. Who wanted it then? Well, no one. And then you sort of like just get the buyers come in and shipped it in, took it up to 14, back down to 3.5. 3.5, like you say, it was this year.
Yeah.
So it's one of these markets. It looks phenomenal at 23,000, but there's no way I'm diving in there. I mean, that could easily be back to 5,000 or 6,000, you know, within 6 months, and then some. And yeah, you know, I'm not saying it won't go to 100,000 or whatever people are talking about.
A million
at some point. Yeah,
punching between 400 and a million, aren't they?
I guarantee there's going to be more people who've lost their wallets and have no trace of where their cryptocurrencies have gone than there is people who are going to benefit out of this market move.
Yeah, that's worrying as well, isn't it? Okay, right. Gun to the head from yesterday. As Steve mentioned, he was desperately unlucky with that gold trade. It would have gone on to hit target, but timing is everything, as we say. 2 stop outs for us on dollar CAD and gold. Ian managed to get a 1R win on dollar index despite seeing similar levels of volatility and not sort of maxing out on that one as maybe we could have done.
Half past 9, and it was probably at flat, but
or 8 o'clock, and it's 3R on site.
Yes, yeah, it was, wasn't it? So, yeah.
So we're got to try and pick something today. I mean, I'm really struggling, if I'm honest, but just looking over the last hour, I've noticed that the FTSE has posted a bearish engulfing candle over the last hour. Bit of resistance there from 8 o'clock yesterday at 6,600. So I'm going to sell it today at 6,578. Stop loss and bring that down. 66.10, targeting 64.90, 2.6R on that one.
Good luck.
That's my trade of the day. Possibly a bit of topping going on there, but we'll see. Who's next?
I'm going to go for oil. Just didn't look at this time frame. Just going to have a look at this. This is US oil. Not a million miles off, but anyway, 8-hour chart got an ending wedge pattern, got a 261.8% fib, got some divergence, I'm sure, if I can find the right thing. Yeah, so got some bearish divergence. So the chart made a high here, RSI made a high there, and it's now making a lower high. So quite like that. And the fact that the 1 hour chart is posting a bearish engulfing, which often highlights top of a trend. So I'm going to have a go at this. I'm not going to be super aggressive because we need the R. So I'm not going to put it above the 261.8%. I'm just going to put it above this hourly candle. I'm going to go for that. 48.32. Targeting 45.69 with a stop at 48.59. Gives me 9.7 R.
Oh yeah.
And I've already nicked 2 ticks. Look.
Lovely. Steve, you got anything?
No.
You're going to buy Bitcoin after all that, aren't you?
No, absolutely dick all here. I'll tell you what I'll do. Where's the stop on there? 320. Yeah, I'll sell down. I'll be another mug punter trying to sell these tops. So I'm going to sell it here.
Wrong one. You've got a buy thing on there.
Oh, fucking hell, sorry, mate. Should I be buying it then? Fuck it.
No, we all sound very defeated with all of these trades before we even put them on.
It's got that feel about it, though. I think everybody's a bit deflated, aren't they?
Unless you're long a Bitcoin.
Unless you're long a Bitcoin.
Yeah, but there's only 1 or 2 people long of it, really. I mean,
the whales.
say they're long. Yeah.
Just the 2 of them. Just the 2 of us. There
you go. I'm going to. Now
You're still buying it.
Yeah. Yeah, but no, that's what I said. I'm going to buy it.
Oh, okay.
Yeah. If it's,
I'm not used to going with the trend.
This is like the reverse mentality of the market. If you've been in the markets for 35 years, you start to know these things. So everyone, we're sort of doing the mug thing. We're selling it when it's like rallying and going higher. So, and I've gone to sell it, and I've actually accidentally sort of put the buy thing up there. So I'm going to go buy it.
All right, fine.
Right, it's just fucking common sense. It's why are we selling it? Listen, let's just go. Let's go for that.
Stop there.
Yeah, I mean, I mean, it's not going to stop there. It's going to carry on going anyway. But long at 30,285. I'll have a 50 tick stop, and I'll have a 250 tick profit. Stop at 30,235. Target 30,535. Okay. With loads of confidence.
Yeah, you sound it.
Thank you.
Thanks for that conviction, Steve.
Well, I might get convicted if that fucking works out. Dear oh dear.
Right, okay. So what we got today? We got Bank of England today. No rate changes expected or QE, with unanimous votes on these expected as well. So keep an eye out for your sterling crosses. Obviously, we're going to have Brexit bits and pieces flashing up now and then. In terms of US data, there's a cluster of bits and pieces due out at 1:30. We've got US housing starts, we've got initial jobless claims, and we've also got the Philly Fed index due out at 1:30. So keep an eye on your US dollar crosses at 1:30. Anything else we need to be keeping an eye out for on the docket, Ian?
No, mate. No, okay. Not that I can see of.
All right, well, we're nearly there. We're just grinding it into the Christmas period. This Friday's going to be our last talking ball of the year. I think we all need a break after this horrible run of losers that we've been on the talking ball, gun to the head stuff. So have a good day, gents. Good luck with your trades, and
enjoy.
We will be back for our last video tomorrow morning.
Lovely jubbly.
Cool. Have a good one.
See you, lads.
Right, cheers.